All right, we had a large range day today. We sold 700 points. As you see, we had a new day opening gap lower, and then we displaced away from that new day opening gap, not even wanting to trade back into that new day opening gap. We didn't have true day opening price. We failed to manipulate above true day open. We're contained within this new week opening gap. Then we form an SMT, and then we displace a bit away from the new week opening gap. Just based off of that, that kind of explains the heaviness that we had today. I didn't expect all of this. I did not expect all this. This is hindsight, and like I'll always say, the best way to get foresight, which I don't care, people can call me hindsight demon. The best way to learn is by going in from hindsight and actually seeing what the market narrative was, why price pushed to these certain levels, and the reason is because we're displacing away from the new day opening gap. We form SMT within in the new week opening gap, and then we displace away from that. And on top of that, we're failing to reach up into premium arrays, and we just keep on displacing lower. We had a large opening range gap, and right at 8:30, we'll dig into this. Right at 9:30, we barely draw up into that, and then we immediately displace lower. And although like you don't have to get the complete top of this move, or at 9:30, or even here, like none of that is necessary. But as long as we're trading within institutional order flow and just get pieces of that move, then that's all that we really need. And as we can see, institutional order flow the whole day is bearish. It's bearish. Although like there can be some form of longs, it's just not there. And as you can see, institutional order flow, this is just a retracement into a 15-minute imbalance. We're taking stops here, then displacement lower, and then we return to these two down close candles on the daily chart. That's what I'm referencing, the opening price. So, and also a new day opening gap. So new day opening gap with an order block, that is the real fair value that we're targeting. And I forgot to mention, this is the event horizon. It's just something I'm throwing in here. It's just the distance between two new week opening gaps. If we displace below that, we're likely going to head to the next one. It also is a PD array, but I haven't done too much backtesting with it, so we're just going to leave it as is within the chart. So as we see, we had a nice 2022 model on ES, manipulation above 830 opening price, buy side taken, displacement, market structure shift, imbalance right there. And notice we deliver to the bottom end of that new day opening gap, also to this breaker here on ES there. And here is NQ. I didn't have any real price action except for that on ES. And as I was saying, institutional order flow. What is institutional order flow? Up close candle, respected, up close candle, respected, up close candle. It doesn't even get traded to. Up close candle, respected, up close candle, perfectly respected. This is not a reversal here. This is a retracement into fair value, into these up close candles within that fair value gap. Displacement, up close candle. As you can see here, end of day macro was pretty nice, and we're gonna go over that. So pretty nice price action here, and this is what I was talking about. So we do have the 830 opening price. We do get very small manipulation above that. At 9:30 we open, boom, take buy side, immediate displacement within that 15-minute SIBI, taking buy stops. This is the opening range gap. Notice how we are barely drawing up into that opening range gap. Barely. This was a big opening range gap, so we're failing to even get to that 0.25 level of that opening range gap, and then we just end up displacing. Look at the displacement in price. We're failing to reach up into the premium arrays here. We're failing to reach up into these fair value gaps. These are breakaway gaps here. And here we have the 950 macro. We have this consolidation in price. This is not a reversal. Price cannot reverse from a consolidation. This is just to mark time, also to induce and entice traders here. So a consolidation cannot reverse price, and there is no higher time frame PD array that we would logically be reversing off of. We just have had big displacement lower. We just had big displacement lower. What would make sense for the next expansion leg in price? To sell side. Simple. We have this consolidation. We cannot reverse. Let's draw in these other annotations. Wait, hold up. Bro, did I leave out an annotation? Oh, damn. Here, I'm going to try to pull it up real quick. Oh, and I forgot to do the daily profile. Dang, I'm lacking. We'll just go into trading view for now and then go back into that. But here we have the 950 macro, And then we have our 1050 macro, that event horizon. We have SMT within this. Just look at the wicks, look at the wicks and the bodies, and also returning to that order block, fair value gap order block, time distortion. We have a small imbalance here. We're displacing lower, and here we have the 1050 macro. So as you see within the 1050 macro, we ended up drawing up into this 2-minute imbalance very nicely. Let's head back over to the slideshow. Let's head back over to the. Oh God, where is this? I am lacking today. My bad. My bad. 2-minute fair value gap with an SMT. I mean, I guess I had that on this. Okay, I had that on this slideshow. Then we have up close candles we're failing to draw into. We have these up close candles here on the 1 minute that price trades into. Just complete institutional order flow. Just down close candles, up close candles. Which ones are supporting price? We have down close candles here. They're never really supporting price. We're just retracing into the up close candles. A day where just institutional order flow is bearish. Here we have lunch hour, 1150 macro. We get some forward trade here. We have an imbalance right there. We trade into displacement. We leave a breakaway gap here, and we consolidate. We consolidate. We consolidate. We trade back up into this SIBI right here. We then have a 2022 model, shifted market structure, fair value gap here after taking buy side liquidity there. And notice how this gets respected, even though there was a deep retracement. Where are we retracing to? Right there, fair value. Look at the bodies. Look at the bodies of the candles. That is beautiful delivery right there. Beautiful delivery. Lunch hour, we get a lunch on stop. We get a run on some stops here, trailed stops, and then 130 we get manipulation above that opening price into this up close candle, those up close candles. And here we have the final hour macro. So these boxes here denote new week opening gaps and then new day opening gaps. For the indicator that I use, which is what I usually use, you can't see them on the 1 minute chart because the 1 minute chart doesn't have much data. I refer to every new day opening gap that we have that's on the chart because I've noticed from my own backtesting, and I would say come at terms to find whatever works for you. But these levels, even though however long they were, these new day opening gaps and new week opening gaps will continually get respected from my own backtesting. Again, I would do your own backtesting, but I've noticed that literally every new day opening gap and every new week opening gap will pretty much get respected. I use the last 60 new day opening gaps and I use the last 20 new week opening gaps. That's what I personally use, and I found that those have been very sensitive. So as we see, consequent encroachment of this new day opening gap is right what we draw up into. We take buy side liquidity within that market on close macro. 350 macro was absolutely gorgeous here. So we originally had this imbalance perfectly get traded to. Then we have a shift in market structure here. Institutional order flow entry drill. Look at this inversion right here. We have inversion, institutional order flow entry drill. And notice these lows were engineered right above that order block level and this new day opening gap level. Once we respect that, we get shift in market structure breakdown. What is more likely to see expansion leg? Lower. And look at that. Look at the bodies. That is beautiful delivery. Beautiful delivery, 350 macro. We end up delivering that right around 353. And then closing back within the daily range to create a wick on that daily chart. So overall, it was an interesting day. You know, large range day. Days like these are days that if you impose your will on the market, it's just going to slap you around. It's going to slap you around. And then if you want to see retracement, you want to see a reversal, which I always anticipated maybe some form of short-term retracement, but just stick with order flow. Order flow is key. Order flow is king. Once that reverses, once we get displacement legs in price, then we can maybe look for something. But until that happens, stick with underlying order flow. That's the lesson that I have for myself today. Anyways, I appreciate you guys. I will see you all in the next one.